Preparing for a fraud analyst interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a fraud analyst do, and how do you define success in the role? A fraud analyst protects the business and customers by identifying suspicious activity before losses grow. I would monitor alerts, review transactions, validate customer behavior, investigate patterns, and decide whether to approve, block, escalate, or request more information. The role is not just catching fraud, it is balancing loss prevention with customer experience, regulatory expectations, and operational efficiency. Strong analysts document decisions clearly, so downstream teams can understand the rationale. While answering, focus on fraud prevention, investigation, customer protection, loss reduction, documentation, and judgment. Show that success is not only catching fraud, but balancing risk, accuracy, and customer experience. Question 2. What are the main types of fraud you would expect to see in a financial services or payments environment? The major fraud types depend on the product, but in payments and banking, I would expect account takeover, stolen card usage, identity theft, synthetic identities, mule activity, and first-party fraud. In e-commerce, card-not-present fraud and refund abuse are common. In digital banking, phishing-led logins and device changes are major red flags. I would separate third-party fraud from customer misuse because the investigation approach, recovery path, and controls are different. Make sure to cover common fraud categories such as account takeover, identity theft, card-not-present fraud, synthetic identity fraud, mule accounts, first-party fraud, phishing, and transaction laundering. Question 3. Walk me through how you would investigate a suspicious transaction alert. I would start with the alert reason and transaction context, amount, merchant, time, location, payment method, and risk score. Then I would compare it against the customer's normal behavior, recent login activity, device history, IP address, velocity, and any previous disputes or fraud markers. If the evidence suggests compromise, I would block or escalate quickly. If it looks explainable, I would document the rationale and avoid unnecessary friction for the customer. In your answer, talk about reviewing transaction details, customer history, device and IP data, velocity, location, merchant behavior, prior alerts, documentation, and deciding whether to approve, decline, block, or escalate. Question 4. How do you balance fraud prevention with avoiding false positives? Fraud prevention is valuable only if it does not block too many legitimate customers. I would look at both fraud loss and false positive rates, not one metric in isolation. For example, a rule that stops $10,000 of fraud but blocks $200,000 of legitimate sales may need refinement. I would tune thresholds, segment riskier populations, use manual review for borderline cases, and continuously compare confirmed fraud outcomes against approved and declined transactions. Be sure to mention customer experience, revenue impact, approval rates, false positive review, rule tuning, risk thresholds, manual review queues, and the importance of measuring both fraud loss and good customer friction. Question 5. What red flags would make you suspect account takeover?
Account takeover usually shows a break in the customer's normal pattern.
I would look for a new device, unfamiliar IP, impossible travel, password reset, email or phone change, failed login attempts, and a transaction shortly after profile changes. Another strong signal is adding a new payee or shipping address before a high-value transfer. No single red flag proves fraud, but several together create a pattern that deserves immediate containment and customer verification. While answering, focus on abnormal login behavior, new devices, impossible travel, password resets, email or phone changes, payment changes, beneficiary additions, unusual transaction velocity, and customer contact attempts. Question 6. What metrics would you track to evaluate fraud performance? I would track a mix of loss, accuracy, and operational metrics. Key measures include fraud loss rate, chargeback rate, detection rate, false positive rate, approval rate, and manual review rate. For model or rule performance, precision and recall are useful because they show how many flagged cases are truly fraud and how much fraud we are catching. I would also monitor average handling time and customer complaints because fraud controls must be sustainable operationally. Make sure to cover fraud loss rate, detection rate, false positive rate, chargeback rate, approval rate, review rate, precision, recall, recovery rate, average handling time, and customer impact. Question 7. If you had 200 alerts in your queue and limited time, how would you prioritize them? I would prioritize based on potential loss, risk score, time sensitivity, and customer impact. High-value transactions, active account takeover indicators, rapid velocity, vulnerable customers, and cases with funds still recoverable would move to the top. I would also follow any mandatory escalation rules for regulatory or high-risk cases. Lower-risk alerts can be batch reviewed or queued later, but I would still document the prioritization logic so the process is defensible. In your answer, talk about risk-based prioritization using transaction value, risk score, customer vulnerability, velocity, time sensitivity, potential loss, regulatory exposure, previous confirmed fraud, and escalation rules. Question 8. How would you use data analysis or SQL in a fraud investigation? Data analysis helps move an investigation from suspicion to evidence. I might use SQL to pull all transactions tied to a device ID, IP address, card, merchant, or customer group. Then I would look for clusters, repeated declines, shared attributes, unusual velocity, or common beneficiary accounts. For example, if 20 accounts use the same device and cash out within 1 hour, that suggests organized activity rather than isolated customer behavior. Be sure to mention pulling transaction history, joining customer and device data, identifying patterns, grouping by IP or merchant, checking velocity, comparing cohorts, and validating whether a rule is working. Question 9. Explain the chargeback process and how it relates to fraud analysis. A chargeback begins when a cardholder disputes a transaction with their issuer, often claiming it was unauthorized. The issuer may reverse the funds, while the merchant, through the acquirer, can provide evidence during representment. Fraud analysts review reason codes, transaction data, customer history, delivery proof, and authentication evidence. Chargebacks are not just operational disputes, they are feedback. Trends by merchant, device, geography, or product can reveal gaps in fraud controls. While answering, focus on cardholder dispute, issuer, acquirer, merchant response, evidence collection, representment, reason codes, deadlines, fraud loss, and how chargeback trends inform prevention rules. Question 10. How would you distinguish friendly fraud from true third-party fraud? True third-party fraud means an unauthorized person used the account or payment method. Friendly fraud usually involves the legitimate customer disputing a transaction they made, forgot, or misrepresented. I would compare device history, shipping address, login patterns, prior purchases, delivery confirmation, and customer communications. If the transaction came from the customer's usual device and shipped to their verified address, friendly fraud becomes more likely. Still, I would phrase findings objectively and avoid accusing the customer without evidence. Make sure to cover customer intent, authorized user behavior, device and shipping match, prior purchase history, delivery evidence, account access consistency, communication records, and the need to avoid unsupported accusations. Question 11. A customer says they did not authorize a transaction, but the data looks consistent with their normal behavior. What would you do? I would treat the customer seriously while testing the claim against the evidence. I would verify identity, review device, IP, location, login timing, authentication method, merchant details, and whether an authorized user or household member could be involved. If the data strongly supports legitimate use, I would document that clearly and follow the dispute policy. If any uncertainty remains, I would escalate or request more information rather than forcing a premature conclusion. In your answer, talk about empathy, evidence review, authentication checks, customer verification, possible household or authorized user scenarios, escalation, regulatory timelines, and careful documentation of the final decision. Question 12. How is fraud analysis different from AML, and where do the two overlap? Fraud analysis usually focuses on preventing unauthorized or deceptive activity that creates loss for customers or the firm. AML focuses on detecting and reporting suspicious movement of illicit funds. They overlap when fraud proceeds move through mule accounts, scam victims send funds, or synthetic identities are used to open accounts. In practice, a fraud analyst may stop the immediate loss, while AML teams assess whether the activity requires suspicious activity reporting or broader network investigation. Be sure to mention that fraud focuses on unauthorized or deceptive activity causing loss. AML focuses on illicit funds and laundering, and overlap occurs with mule accounts, scams, identity abuse, and suspicious patterns. Question 13. How would you design a basic fraud rule for a new digital payment product? I would start by identifying the product's main risk points, such as new account funding, first transfers, device changes, and high-value payments. A basic rule might flag new accounts sending over a threshold within minutes of setup, especially for a new device or risky IP. I would backtest the rule where possible, estimate false positives, pilot it before full rollout, and monitor outcomes. Rules should be adjusted as fraud patterns and customer behavior evolve. While answering, focus on defining risk indicators using historical or proxy data, setting thresholds, testing impact, monitoring false positives, segmenting customers, piloting the rule, and creating review procedures. Question 14. Tell me about a time you had to make a judgment call with incomplete information. In fraud work, perfect information is rare, so I would explain how I weighed risk and acted responsibly. For example, if a high-value transaction has several takeover indicators but the customer cannot be reached, I would likely place a temporary hold and escalate. That protects funds while preserving the chance to release the transaction if legitimate. The key is documenting what I knew, why I acted, who I informed, and what follow-up was required. Make sure to use a structured story with situation, task, action, and result. Emphasize risk assessment, evidence weighing, escalation, communication, documentation, and learning from the outcome. Question 15. How would you explain a complex fraud case to a non-technical stakeholder? I would start with the business impact, then explain the evidence in a clear timeline. Instead of saying the device fingerprint had anomalous attributes, I would say the account was accessed from a device never seen before, followed by a password change and a large transfer. I would separate confirmed facts from assumptions, state the decision made, quantify potential loss, and recommend next steps. The goal is clarity, not technical complexity. In your answer, talk about simplifying the timeline, separating facts from assumptions, using plain language, summarizing risk, explaining the decision, quantifying impact, and recommending next steps. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.